You have been doing this behind her back, losing and losing and taking out more and losing for years. How did that conversation not come up with your wife at all?
If you don't turn the situation around now, I can only see you spiraling into more and more debt.
Why is it that you had to hit $100,000 of debt for you to finally wake up?
If she divorces you and you have to pay child support and alimony and all this stuff, you're in serious trouble. I don't care how good your job is.
Because at the end of the day, you got to make these changes or you're never going to make progress.
It's about your why and that bigger vision to wanting to be debt-free. Welcome to Just Another Money podcast with your hosts, Lauren and Nick. We're here to take real-world money situations and break them down into actionable steps you can actually use.
Whether you're budgeting, paying off debt, or saving for your future, we're all about making finances easy to understand and putting you in control of your money. Welcome back to the show, everyone. Today, we're talking about paying off debt. From putting thousands of dollars on credit cards to taking out secret loans, we're diving into all things debt today. But before we get into that, Lauren and I wanted to share a question that was submitted to the show by a viewer. And just as a quick reminder, if you want to have your questions answered live on the show, you can go directly to our website, justanothermoneypodcast.com, and click the submit a question button. Or if you're a subscriber to our newsletter, you can just reply directly to any of those emails and that question will go straight to us. But Lauren, do you want to kick things off for today and read out the question?
Yeah, absolutely. So this question says, hey, Lauren and Nick, I'm looking for outside advice besides my family on trying to buy a house. For context, I'm 28 years old and make about $83,000 a year in the project management field. I've been living on my own for about 8 years until recently. My partner and I split up in September, so instead of signing another lease or trying to find somewhere else to live, I made the decision to temporarily move back home. I've been working on paying off my debt, and I only have about $5,000 left to be completely debt-free. I took the approach of paying off the debts with the highest interest rates first. My parents are amazing role models. They went from filing bankruptcy during the 2008 recession to owning and operating their short-term rental business. But I think they're a little out of touch. They have great intentions and they're not wrong, but they're also not right. I want to stay within 30% of my income for overall housing expenses. I keep trying to explain that to my parents, that a $150,000 to $180,000 house will put me over that. My dad suggests buying a split level to live in half and rent out the rest. I'm totally fine with that, but don't want to go house broke trying to fix it up if it needs work and relying on a tenant. There are lots of smaller homes in the area I'm looking at between 90 to 115K. I kind of want to go that route, but the only downside is that it wouldn't have a high rate of return, so I'd most likely rent it out when I'm ready to upgrade. I definitely want a house to both live in and invest in, but putting down 20% seems a bit much for someone in my situation. My thought is to find a house that I can live in, but still needs some work, then get it reappraised and refinanced so I don't have to pay private mortgage insurance. Just looking for advice. I still want to be able to live my life. I just don't want to go house broke.
Yeah, that's a great question. And, when I first saw this, I think the first thing that came to mind is that this person's 28 years old and you're an adult. And while you might be, living at home temporarily, at the end of the day, your parents really don't get a vote in how you decide to manage your finances. And I think ultimately, you're the one who has to live with the consequences, whether those are good or bad. But yeah, you have to be the one to make this decision for yourself. And I don't think your dad is coming from a bad place, right? I think he probably has your best intentions at heart and he really just wants the best for you. But I feel like his idea, it's really not a bad idea, but if it puts you in that range of you wanted to stay in 30% of your income for housing, if that pushes you beyond that, 40 or 50%, that's when this idea of house hacking, because that's essentially what this is, that's when it gets really dangerous, because then you really do have to rely on a tenant, or like you wrote, you're going to be house poor and it's going to be really hard to make all the rest of your payments. And especially when you're buying your first home, you have to assess, do I want to deal with the added hassle of finding a good tenant, doing all the background checks, verifying their income? There's a lot more to it than just oh, let me just buy this bigger house and I can rent out a portion of it. I like what this person wrote of finding a house that fits within their budget, that maybe needs a little bit of work on it. They can kind of hopefully get a good deal on it, and then they can build some instant equity by putting some work into it. If that is fun to you and you're excited for that, that's personally seems like the route that I would go. Unless you could find a place like your dad is suggesting that does fit your budget, that's when I think house hacking can be really great, because the total mortgage could stay within that kind of 30% range. And then when you find a tenant, then it cuts your housing expense even lower. You just don't want to get into a situation though, where you need to rely on a tenant and And if that tenant doesn't pay, or if you find a bad tenant, or something goes wrong in the house, because something always will, like then you're kind of just stuck in a hard place, you know?
Yeah, I love this question because I think this person, they really want to make the best decision. And I think based on the way they ask this question, like they know the right answer. They know which way they want to go. They're just, we want to trust our parents. We want to give them the benefit of the doubt. But how this question is worded, they know exactly what they want to do. And it's not go with parents' advice, dad's advice. I think the best thing for them to do is, this is going to be the first time they're owning a home.
Yeah.
So doing the house hack route and having to take on a tenant, what if you, like you said, what if you get a really bad tenant? Then you've just completely regretted everything. And then, you mentioned in here, like having to like flip the house or something. What if you hate that process too?
Yeah.
So I think just going with your gut here and sticking with that 30% of your income going towards housing, which I love that this person is running the numbers. That's one of the most important things when buying a house. So I think the person knows the answer to this question, and it's stick with your gut here and go with those houses between the $90,000 to $115,000 range, which is incredible. I don't know what market that is, but in this area, we cannot find anything for that. Maybe just a shed. But I think the person knows the answer, and that's to, stick with their initial thoughts on this. And they're doing the great things by, planning out the numbers and looking at everything and considering other options. But yeah, that's what I think they need to do.
Yeah. And on that note, they did say they're looking to keep their housing expenses to 30%. And I do think you need to map out all of these numbers on paper. But like one word of caution I would say is if you're mapping out all the numbers, like what your mortgage is, what homeowner's insurance is going to be, like your utilities, if you want that all to stay under 30% and on paper it's coming out to 30%, like I would probably estimate that you're probably going to be a little off and the expenses might be a little higher. So, if you want to try to come in below that 30% on paper, just to give yourself a little cushion, that would probably be best, because you don't want to get into a situation where it's like the numbers fit great if everything goes well and then something doesn't. And now now you're kind of put in a tough space. But with regards to the 20% down payment, they wrote that it seems like a bit much for someone in this situation. And, for people who don't know, if you put down 20%, you can avoid PMI, which is private mortgage insurance. And usually people say like that's ideal because then you don't have to pay this extra fee per month. But if 20% seems like it's just not attainable for you right now, then I would say it's absolutely okay to go something lower, like 5, 10, even 15%. And then you just slowly work towards getting to that 20% and that PMI will fall off. But I would for sure suggest to this person, you're so close to being out of debt, like put the home buying process on pause, get that debt wiped out, and then make sure you have a fully funded emergency fund. And I would probably lean closer to like, that 6-month emergency fund, just a little bit more cushion. Because if you want to renovate the home, or if there's an issue that you need to deal with right away, like you have just some extra funds to play with. I think all of this is to say, like, you just don't want to put yourself in a vulnerable position, especially if you're someone who's like risk adverse. Like you don't want to put yourself in a place where you have to make a tough decision and it puts you in a financial bind. So I think, take your time with this. This is probably going to be one of the biggest purchases of your life. And it's okay to kind of walk into this process slowly. And it's a really good idea to be gathering a bunch of different advice and opinions. But at the end of the day, you got to be the one who makes this decision. And like Lauren said, it sounds like you know what you want to do.
Yeah. And the one part where they said about, if they bought a smaller home, it wouldn't have a high rate of return or whatever. It doesn't have to be that. We always don't have to be purchasing something for some type of return. You know what I mean? Like this is your first house, and it's not like you're going out and buying like a $500,000 home. Like you're going to spend a little bit, and then you said you want to turn it into a rental. So I think that can be perfect for your situation. And I think you need to go with your instinct there, because if you go with what dad says and then you end up not liking the situation, then you're going to be like, I should not have listened to my dad. Right.
Yeah.
So definitely take your own advice there.
Yeah. You don't want to build up some resent because you took someone's advice and now you don't feel like it's not entirely my fault that I'm in this, but yeah, no, I think that's a great question. This person knows what they want to do.
Yeah, absolutely. Well, let's move on to the first situation today. So this one says, I'm in a scary amount of debt and I'm terrified I'll never get out of it. I'm 21 and my finances are screwed. I could make all sorts of excuses as to why, but the reality is from bouts of addictions, poor spending habits, and minimum wage jobs where I spent outside of my means. I have a scary amount of debt and I don't know how to move forward. I've tried a few different things, but always seem to end up in the same boat. I just froze all of my credit cards to stop spending and started using only my debit card. Here are all of my debts. Apple Card with $3,000 balance at 26% interest. Navy Federal Credit Card with $985 balance at 18% interest. Capital One Card with $19,000 at 15% interest. A local credit union card with $7,800 balance at 16% interest. A motorcycle loan with a $5,000 balance at 8%. And then finally, student loans, which are at $2,700 with balance at 6%. A total of about $38,000 of debt that scares the shit out of me. I'm in sales, so my income ranges. I'm guaranteed a minimum of $2,500 a month, but more likely that's closer to $5,000. My expenses are fairly low since I have cheap rent. Everything adds up to about $1,200 a month, but my minimum payments add another $1,000 to that. With interest rates and payments so high, I feel like I'm going more and more into debt each month. I know I'm screwed, and as much as I hate talking about this, I need help.
Yeah, I really like that. If the one of the very first things this person said is that they could make all sorts of excuses for why they're here, but at the end of the day, like they took ownership. Like it sounds like they may have faced some addiction and some poor spending habits. And I think the sooner you can identify what caused you to get into the situation, like the sooner you can find a solution to get out and hopefully never go back into it. But yeah, I mean, at the end of the day, it sounds like you probably were an overspender a little bit, and then you kind of couple that with some sort of addiction and things just got out of control. But, okay, I know that the $2,500 a month is at minimum, but it sounds like you make closer to $5,000. Like, given your expenses, like that's a pretty great income. It seems like you have a lot of disposable income. And so that's the good news. And I would say the part that's really hard to grapple with here in your situation is that, you have $1,000 in minimum payments. And so that just eats up a huge chunk of your monthly income. But, I think that this person could probably take some sort of hybrid approach to paying off their debt. I definitely would say, let's focus on the higher interest debts first, get those credit cards listed out first, and then you can deal with the student loans and the motorcycle last. But given that there are two credit cards here that have a relatively low balance, like there's one that's under 1,000 and one that's 3,000, I would say let's start with maybe some sort of snowball method. Let's get that first credit card, really low balance, wiped out. You free up a minimum payment and you kind of start to build that momentum, that confidence, like, hey, I can really do this. And then once you get those credit cards wiped out, then, you can focus on the student loans and the motorcycle, which the interest rates are kind of right at that threshold where like it's high, like the motorcycle's at 8%. That's typically what we consider higher interest. But again, like if you can get those credit cards wiped out, you're going to be in a completely different situation, going to free up a ton of your income. Then you can just make a plan for how you would approach those other debts later. Yeah.
And I love this person for, like you said, taking control of the situation and like not making excuses like, hey, this is what happened and here I'm at, but I will say they're not screwed because they've already, one of the biggest suggestions was you need to get rid of these credit cards until you understand how to like properly use them. But they froze their credit cards and, they're only using their debit card, which is a big recommendation whenever people have an issue with credit cards. Something that they talked about in here that they just sprinkled in, but I like to always bring to the surface is the addiction piece to that, right? So maybe this person needs to be incorporating some type of addiction counseling or therapy into here so that this doesn't come back. Because I'm betting that when the addiction is running rampant, like the spending habits also come into play there. So that's something that I'm also going to suggest, maybe get some help with that so that we can move forward in that type of sense as well. But yeah, I think the biggest thing is, if this person, let's say that their rent is $1,200 and they have another $1,000 with all the minimum payments. So let's just round that up to like $2,500 a month to like live. If they're talking about rent, and their food and everything, they potentially, with this sales job that this person has, they potentially have $2,500 extra dollars per month to throw at this debt. And if you do the math on that, like $38,000, that's going to go away pretty quickly. Yeah. So I actually, when you're in the situation, you feel like it's very heavy and there's no way out of it. But when you actually take a step back and look at the math there, and this person seems like they really want to get this paid off, this can move pretty quickly. Throwing $2,500 to it is going to really, like you said, it's going to start knocking off some of those smaller balances relatively quickly. And then you just have those bigger ones to worry about. And then with the snowball, it just continues to roll. And before you know it, you're working on your last debt and you're like, wow, I've really changed my entire situation. So
Yeah, I mean, within a year, they could easily pay off like 3 of these credit cards and then take a huge chunk at that $19,000 balance card.
Yeah.
But yeah, and the beautiful part about being in a sales position is like, I would assume this person's income isn't capped. And so like, how much more can you grind it out at your job to go from making 5,000 to 7,000, and like Lauren, like you said, like once you start to map it out, like, at first you see this pile or this mountain of debt in front of you, but when you can map it out and you can say, cool, like by month X, I'm going to have this paid off. And then a few months after that, I'll pay off the next debt. Like you can really start to incorporate a plan, and then you can build up that motivation to say, how can I work a little harder at my job, make a little bit more income? And then you can start to shorten that timeline up, because like this person's not in a bad position. Thankfully, they have really cheap rent, really low expenses. And if they can even just wipe out a few of these credit cards, like freeing up all that extra money from the minimum payments will make a huge difference towards tackling that big. Yeah, I would say the big one is the $19,000. That one's the one that probably is going to suck the most. But if they can get the other ones wiped out, you're going to free up so much extra funds to tackle that.
Yep. And I think that this person, the way they're asking this is just, they're going to do this. They're not making excuses. I know a lot of people who have similar debt situations to this, and it's just the economy's bad and, things are so expensive. And it's like, I don't think your trip to Target was necessarily the economy. You know what I mean? So this person's going to do this, and they have a solid plan to do it because, like you said, with the sales job, I think that they can increase their income. But they seem like they are tired of this and they're going to get out. So I love this situation for this person because they're not screwed and they can definitely get out of this.
Oh yeah, absolutely. And they already froze their credit cards, which is a huge plus. And they could probably even take it like one step further. And like, honestly, like I would probably just cut those cards up, and you don't have to like close them out or anything, but make it so that you physically cannot accumulate more debt. But just like the initiative that this person has taken and the way that they've worded this question to me just tells me like they're ready to do this. And like you said, like they're just tired of the situation. And that is the recipe for success when it comes to paying off debt.
Yeah, absolutely.
Cool. Well, why don't we move into the next question? So this person wrote, is it better to save or pay off debt? I'm coming into $4,000 that I never thought I'd see. I'm young, and while not in horrid debt, I do have 3 credit cards. I'm paying off one credit card completely with $1,500, and then we'll have about $8,000 left of debt. Here's the breakdown. A $1,500 credit card at 20% interest, a $3,600 credit card at 24% interest, and a $4,400 credit card at 24% interest. Do I take the remaining $2,500 and put it to the cards, or do I take that and put it into a savings account? I can't decide what is the better choice. I know paying off my cards will increase my credit score, but is it better to have a pillow of savings and stay in debt, or chip down further at the debt and save a smaller amount? As far as regular finances, I can afford my payments on those cards as well as my rent and utilities. I don't really have much of anything in savings though. I don't have a lot of expenses, but I do have a cat and a car, both of which sometimes have higher bills, which makes me think having a savings is better. But if I pay down those cards, I pay less in interest, improve my credit score, and can use the card if needed to pay for emergencies. What should I do?
Yeah. I love this question. I love that this person, has this amount of money coming to them, which is a blessing, so we want them to use it wisely. Now they've said they want to pay off that small $1,500 credit card and they're going to have $2,500 left over. So what should they do with it? First, I think everyone knows, like you and I are going to say, you need to set aside at least your starter emergency fund. So I don't know, this person did not say what their, 1 month of expenses would be, but let's say they have that, they have that $2,500 left over and their expenses are $1,500 a month. So technically they would have another $1,000 to then throw at the debt, which you can do that at that point. Now they said something about, their car and their cat costing them. So maybe they bump that up a little bit, like a little bit of extra savings, if that's something they're anticipating to be, coming down the pipeline. But yeah, we're starting there. We're starting with that starter emergency fund and then seeing what we have left over, because I'm guessing you got into this credit card debt somehow, and it's probably because you didn't have any savings set aside. So we're going to start there. This person mentioned that they're young, and I love that they're asking the question about this. This person really has an opportunity to change things around, because if you don't, we already saw a young person in the previous situation who had a bunch of debt. If you don't turn the situation around now, I can only see you spiraling more into more and more debt. We see it all the time, to the point where you feel like you can't change your situation because you're so far in the hole. Your income is less than what your debt situation is. And then it's really hard to climb out of it. So I'm going to get clear on, after you save your, your starter emergency fund, I'm getting clear on my expenses because it's pretty apparent to me that this person doesn't have a clear budget and what their expenses are, because they already have, they're downplaying it like, oh, it's not that much debt, but it kind of is, especially with the interest rates on those amounts are going to spiral upward very quickly if they don't get this paid off. So you need to get, you got into this debt somehow. So you need to adjust your expenses moving forward so this doesn't happen again. So really mapping out all of your income and all of your expenses and then seeing what's left over, what you can throw towards the debt, really how you can manage your money month to month. Now, much like the last person already did this on their own, I'm going to suggest a credit card cleanse for this person. You're going to cut them up. You're done with them. No more credit cards until you can use them responsibly. I think there are so many people out there that cannot use credit cards responsibly. And, for me, I put all of my expenses on a credit card every month and then I pay it off because I'm really just using that as my debit card. My mom always taught me that when I was growing up, like, you do not buy anything on your credit card that you cannot pay off from your bank account. So until we get there, I want this person to be done with their credit cards for now, because this is how we got here, right? There's a reason you're putting different things on this card because it's easy. It's easy to just say, okay, I'll pay it off next month, but then something else happens and then you can't pay it off. So also we want this person to get out of that mindset of credit cards are for emergencies, because we have seen, this person we see, there's too much on here already and another emergency is only going to set you back that much further. So that's why we're putting your little emergency fund aside. That's what you're going to use for true emergencies. But this person has an opportunity here, but they just can't let it slip away, honestly.
Yeah. And I love the question, but there's a few things that they wrote that just really kind of rubbed me the wrong way, saying like, I'm young, but I'm not in horrid debt, but I have 3 credit cards that have a balance on them. And thankfully I'm getting this $4,000 just gifted to me, it seems like. And then they seem to be really focused on improving their credit score, which why would you be in debt in the first place if your credit score is a priority? And then the last one, probably the worst offender, is that if they put money towards paying off the cards, then they can have that card for emergencies. And to me, that is just like huge red flag. Like you need to have an emergency fund set aside first. And that way you don't have to go back into debt when something inevitably comes up. But yeah, I think you hit the nail on the head there. Like save up an emergency fund. Then if you have anything left over, put that towards the debt. And then you got to get super clear on your expenses. And like you said, like this person's clearly not budgeting. I rarely see someone who is detailed with their budget and then also falls into credit card debt, because once you lay everything out in a budget, you know where the holes are, you know where you're wasting money. And then unless you just don't care, like you're not going to fall into credit card debt if you are very diligent about budgeting. But yeah, using a credit card as an emergency fund is just not a good idea. Cause like you said, like you fall into this cycle of paying for things that happened last month. And then, you continue to put things on your credit card and say, oh, I'll pay it in the future. And then when the time comes, you had to use that money for something else. And then that's how you build up these mountains of credit card debt. But I think this person's on the right track. Luckily, they're getting that $4,000 gift. It seems like, I think this is really their opportunity to turn it around.
Yeah, I agree with you.
All right, taking a quick break from today's episode, Lauren and I have some exciting news we'd like to share with you. If you're feeling stuck with your finances and don't know where to start, we have you covered with our one-on-one financial coaching.
These are no strings attached coaching sessions that you can sign up for today. No ongoing commitment. You simply book a session whenever you need one.
Each call is 90 minutes, and by the end of it, you'll have a clear budget to work with and a solid plan to start paying off your debt. Plus, we'll make sure you walk away with some awesome tools to keep you on track, including our budget dashboard and expense tracker, as well as our debt payoff optimizer.
And the best part, you'll get to work with both of us on the call. Together, we'll help you develop the best possible strategy forward, answer your questions, and make sure you feel confident about managing your money.
So if you're ready to get a handle on your budget and kickstart your financial journey forward, check out the link in the show notes to book your first session.
We can't wait to get started with you. Now, back to the episode. Should we move on to the next one?
Yeah, absolutely. Let's do it.
So this one says, I've kept $100,000 of debt hidden from my wife. How do I tell her? Over the last 5 years, I've accumulated $100,000 of debt through day trading, spread over 3 loans and 3 credit cards. I fell for all the traps, lost some money and took out loans to win it all back, but kept on losing. I kept repeating this until the bank wouldn't give me any more money. I suppressed it for so long and only realized the deep shit I was in once it was too late. The burden of this secret is unbearable. I need to tell my wife. We've been married for 6 years and have 2 young daughters. Over the course of our marriage, I've been the only source of income for our household, but my wife has recently started to work again part-time. I love her to death, and apart from my huge financial betrayal, we have a healthy marriage. I've accepted that the money is lost and there won't be a way to win it back through more trading. I've closed both of my trading accounts and made a plan on how to pay back my loans and credit cards. Luckily, I have a secure and well-paying job, and it should take 3 to 4 years to pay it all back. While I have, of course, financially ruined my family, we are not on the brink of homelessness and starvation. My greatest fear is that I'll lose my wife and kids. If it was a few thousand, I wouldn't be so worried, but it's to the point where we could have paid a home with this money. Whatever her reaction is, I know there's no alternative to coming clean about everything to try and save my family. I really don't know how I should start this conversation and how to approach my wife's more than justified, expected angry reaction. I know I've destroyed the trust in our relationship. How can I diffuse this dreaded conversation and move forward with her?
That's a tough one. I mean, $100,000 lost in day trading. And I am really glad that this person said that they accepted the fact that the money's gone. Like, there's no more amount of trading that's going to get you out of this. Clearly, like, this is not your game. Mm-hmm. But I really dislike that that this person wrote, "We are not on the brink of homelessness and starvation." I would say that you are. Like, you are the sole provider of income for the household. And that always means that you are one bad day or one wrong conversation or one argument with your boss away from putting your whole entire family and everything that they have at risk. I don't think this person realizes how bad the situation is. And I think they're more worried about managing the reaction from their wife. I think that seems to be the concern, when the concern, that's a valid concern, but you should also be extremely worried about how you got into this debt, how you let this happen over the last 5 years, that you just kept this from your wife. Like, where did that, like, you took this money you had to get this money from somewhere to start with. Like, how did that conversation not come up with your wife at all? To me, that's the part that I think is so much of a betrayal, is that this didn't just happen recently. Like, you have been doing this behind her back, losing and losing and taking out more and losing continuously for years. That's, I think, going to be the hard part for your wife to grapple with. I don't think there's a way to avoid her reaction. And I think you kind of just have to let her emotions, be heard. I think when you drop this news, you shouldn't come forward with like a plan and say, here's what we should do. Like, the big concern is this marriage still, like, are we still going to be able to move forward after this? Because that's a huge betrayal. And like, financial infidelity is such a real thing. And I don't think people give it enough credit, because you're not cheating on your spouse, like, emotionally, but you're cheating on them with your finances, right? Like, you're going behind their back, you're sneaking around, you're taking out these loans and putting debt on this credit card and putting your whole family at risk, especially with 2 young kids. It just seems like, yeah, I think it would be really hard for me to move past if I found out that my wife was doing something like this. It's just such a betrayal and shows such a lack of trust that it will be hard to come back from. Yeah,
I agree. We've had situations before where it's just a complete betrayal, and this is a betrayal for sure. I do think with the day trading aspect of it, I think he was trying to do what he could for his family. I think it started like innocently, right? Like, he was trying to do this because where are all the people now that say day traders make all this money? This person's 100K in debt and is about to probably get divorced. I don't know. But, I think it started innocently, like that he was trying to, maybe make some extra money to be able to send the kids to daycare or whatever. And then maybe he won some, or not won some, but gained some. And then he lost some. And then he's like, okay, well, let me just try this again because it worked. Let me see if I can do it again. And then it just starts to spiral. And then, like he said, it just kept spiraling until the bank would not give him any more money. So I try to this was definitely wrong of him to keep from her, but I do think he was like trying to do something positive with it at first. And then it just got so far out of control that he has there's no way to move forward with it. Right. This is going to be bad. And, he says, we're not on the brink of homelessness and starvation, buddy, you might be, because if she divorces you 100%. And you have to pay child support and alimony and all this stuff, you're in serious trouble. I don't care how good your job is, because then you have to pay back that $100,000 loans and then all of that spousal support and child support to your family that you've completely financially betrayed. So, these are tough situations. I wish people wouldn't go into that far. Like, why did you let it get that bad? It's so hard.
Once the debt hit like tens of thousands of dollars, like why wasn't that the wake up call? Why is it that you had to hit $100,000 of debt for you to finally wake up? Yeah. But yeah, I think this person is probably getting a little too far ahead of themselves. Like they said that like I made a plan for how to pay back the loans and the credit cards, and like, you got into this situation by keeping this from your wife, and you're not going to get out of it by continuing to keep this plan that you've come up with on your own, like away from your wife. Like, I think you got to deal with the most pressing issue, which is telling your wife the truth, coming clean about it all, letting her have her emotions about it, letting her process what it is. Yeah. Then ask to make a plan with her together. I think that will be a big sign of behavior change. Cause I think a lot of, when it comes to financial infidelity, I think the biggest part of moving past that is seeing a clear behavior change. And if the behavior that got you into this was doing this in secrecy from your wife, you got to change that behavior right away and say, how can I include her in the plan moving forward? Because clearly, like, you couldn't be trusted to do this on your own. Like, you got to include her on it. And that, I think, is going to be a huge part of her regaining trust for you again. Yeah.
And for me, I'm going to see if the grandparents can watch the kids before I have this conversation, because I don't know how that response would be from my wife with $100,000 debt that she didn't know about for years, but it's not going to be pretty. And like you said, let her have the reaction first. Don't come in and be like, I have this plan, because she's probably going to be steaming and like not even hearing the plan that you're proposing to her, because she needs to process what you've just processed for the past however long that was.
5 years.
Yeah.
Jeez.
So let her do that first before you start throwing all of your plans at her. But this is, and again, Nick, we've talked about this before, and this situation has happened before. Why are we not talking about the money as a family? Like, I don't care if the wife is stay at home. She still needs to have she needs to know about the financial picture. It doesn't matter if she's making the money or not. That's the biggest thing here too. We should be having these conversations. That shouldn't have been able to fall under the radar, because we both should be paying attention to the finances, regardless of who's making it.
Yeah. And, I feel like a lot of times it comes as a result of like one person being a little bit more like they're more into the finances, and I know between me and my wife, like, I'm the one who loves to make spreadsheets. I'm the one who like really love to like learn all this stuff about personal finances, but that doesn't mean she just kind of gets left on the sideline until she wants to, inject herself into the situation. Like, no, it's me actively making sure that she's taking a part of all of this. So that way she can feel like she has a voice in the financial decisions that are made. Like you said, it doesn't matter if one person's a stay-at-home parent or if one person makes the majority of the income. Like, in my eyes, it's your money, it's your income, it's now your debt. So like you got to create a plan together. But assuming that, my hope would be that your wife does find a way to move forward with you on this. I would hate to see, as terrible as the situation is, I would hate to see it lead to a divorce, especially breaking up a family with 2 young kids. In the hopes that you two can reconcile, that you can learn how to trust each other again. She can learn to trust you. More importantly, you really got to get clear on what all the debts are, listing out all the balances, interest rates, the due dates, minimum payments, all that stuff. And then I think the best approach for this is going to be paying off those higher interest debts first. And it sounds to me like if you have some credit cards that are maxed out, those are probably going to be the biggest concern, just because those interest rates, I'm sure, are well into the 20% range. And then making a plan to pay off the other loans. But, based on what this person wrote, it sounds like they can get this paid off in 3 to 4 years. I imagine they make a pretty decent income then, because, $100,000 with high interest rates is probably going to continue to snowball pretty quick. But yeah, you really got to include her on the plan moving forward. And honestly, it seems like she may need to take a much more active role in understanding the finances and running the finances. So that way, you've clearly proven that you can't necessarily be fully trusted with this responsibility, at least not right now. Maybe again in the future, like things can kind of shift more into your responsibility. But I think right now you got to kind of give up control and say, hey, look, I messed up and I want your help to make a plan to get out of this.
Yeah, for sure.
Okay, let's move on to the next one. So this person asked, what sacrifices did you make to get out of debt? After years of turning a blind eye to my credit card debt, it's time to make a change. I'm in the hole and need to make massive adjustments to my lifestyle to pay it off. I'm your typical credit card user. Eating out all the time, spa treatments, nails, coffee every day, random Target shopping trips, and more. I believe a lot of my debt is caused by me trying to keep up with influencers and the things I see online, which, yes, I know is stupid. What sacrifices have you made in order to pay off your debt? Also, how much of an impact did small things like not eating out all the time do to help you? Did you find out through your debt payoff journey that you actually didn't need to spend money on all of these things? I would love any encouragement.
I love this question, Nick, because if you don't know out there, I went through a debt payoff journey. I paid off $52,000 in just under 3 years. And at the time I was making right about $50,000 per year. And this person, listed out everything they spend on. And I would say this is the typical,
Absolutely.
typical millennial woman just going out on Target trips and, nails and stuff like that. We like having fun things like that. But, what sacrifices did you make to pay off your debt? So for me, during my payoff journey of the 2.5, 3 years almost, I gave up almost anything that wasn't completely necessary. I remember going back to some of my budgets probably a year ago just to look at them. Oh my gosh, they were so bare. There was nothing in there. I don't think I bought clothes for the entire 2.5 years that I was paying off debt. I had to get really good and comfortable with saying no to trips, meals out with friends, anything that took me away from my goal, which was debt freedom. So the biggest thing is, it's the truth of the matter is it's really not about the day to day. It's about your why and that bigger vision to wanting to be debt free, right? So what's going to keep you on this journey? What is going to prevent this person from wanting to go get their nails done, to go to Target and to go get their coffee and stuff? What's going to keep us on this journey for what could be a few years to get paid off? What are you going to gain out of being debt free? What will this allow you to do when your paychecks aren't going to payments? So those bigger goals that I had were so powerful in keeping me on track. So when I am a year and a half into it and my entire paycheck is going towards my debt, I just have to keep thinking okay, in another year and a half, I'm going to be done with this and I can do X, Y, Z at this point. And that vision was so big. It wasn't just about I can't buy a coffee today. Because if you don't have a big vision, you're never going to stay on the path for debt freedom because it's too hard. You know what I mean? There has to be something bigger there that's going to keep you on that track. And by having that bigger vision, it helps you to not spend on the typical day-to-day items like you used to, small things, random trips to Target, the Amazon carts, all that stuff really adds up. But not only that, it also creates that behavior and habit of impulse spending, and I think that that's what a lot of people need to address. Also for me, this was kind of a random side thing that happened to me when I was on my debt-free journey. I watched the minimalism documentary. I think it's now specifically on YouTube. They took it off of Netflix, but that completely changed my mind and how I looked at material possessions. So that has been my, my way of living since that time. And even through today, I focus a lot more on contentment with what I have and on people and experiences in my life rather than the material possessions. And that has really changed the game for me when it came to debt freedom and just wanting to buy things all the time. So that's really from my experience, what the sacrifices I made and, the question about, how much of an impact do the small things have? Those small things really add up. Showed me that from whenever I changed my spending habits to, making this large amount of debt payoff for my, I'd say average income at the time. So those are the things that I did.
On that note of minimalism, my wife and I are in the process of packing up our 2-bedroom apartment, and we have donated boxes and boxes of stuff. And my wife's family has for their whole side of the family, they have a big group chat, and she has consistently been posting do you want this or do you want that? And oh my gosh, it makes me hate having stuff because it's such a process to pack everything up. And there's things that I'm pulling out of drawers or cabinets that I'm I didn't even know I had this anymore. It's just, I back to the question though, I would say that honestly, in my experience, I don't feel like people they rarely fall into credit card debt from a single like large purchase.
Yeah.
It happens from those little like what seem like insignificant purchases, like the daily purchases that you make of the coffee or the DoorDash or like just the little things. Those are what add up to be tens of thousands of dollars in debt if you do that every single day. And you know, you talked about having a big why, and I think that's so important. And I think the second piece to that is consistently reinforcing that in your head with like really positive self-talk. Because if you have a really good why, but every time you come up to a situation where it's like, oh, I really want to go out to coffee with all my coworkers, and you're like, oh, this sucks. Like, I can't do it. Like, I know why I'm not doing it, but it still sucks. That's just going to make it 10 times harder for yourself. But if you can tell yourself, look, I know why I'm not doing this. I know why I can't go out to get that coffee, or I can't buy that coffee, or whatever it is. And I'm so excited for what it's going to give me in the future. I think if you can just make that little switch, and at first it's going to feel so ridiculous to be having to talk to yourself in your head like that. Yeah. But the more you do it, the more you build up that habit of consistently talking to yourself in a positive way. And it's just going to make these things so much easier. But you know, it really is like that death by 1,000 cuts idea where like you make all these little purchases. You're like, I'm not a big spender, or I never buy anything that's so big, but you spend $10 here and $15 there and $30 here. And before you know it, like at the end of the month, if you were to count that up, like you'd probably spent like $1,000 a month on just shit you just didn't need. And I think that's what can be so eye-opening for people who are trying to get out of debt, especially credit card debt that came from bad spending habits, is like print out your bank statements, literally get a highlighter, and what was every single purchase that was not a necessity. And I guarantee you, like it's if you're really serious about getting out of debt, like if you feel shame about it, or you feel guilty about it, like it's going to make you feel, honestly, like it might make you feel a little disgusted with yourself. And that's kind of the shift that you need to say like, okay, like as much as I want to go out and do these things, I know that it just leads me nowhere. And honestly, it probably drives you further into that hole. But yeah, it's those little, like when this person wrote, like how much of a difference did those little things make? Like that makes all the difference. Unless you have like some massive emergency that you throw on a credit card, like that's usually what it is.
Yeah. And, you know, so I think everyone can approach their debt payoff journey a little differently. If you are somebody like this person that goes and gets their nails and spa and Target and all that stuff, I wasn't really that type of person. I would spend randomly, like if I had to go to Walmart for something, I would spend randomly there, but I wasn't like getting my nails done and things like that. But let's say, for me, like, first off, I did most of this was during the pandemic. So like, I wasn't really going out and about that much anyway. But so I took a really extreme approach, and, you know, I gave myself a little wiggle room each month if I had to, you know, get something random. But let's say you're going through a debt-free journey and you really value that coffee, you know, that you have with a friend like once a week or whatever. You can plan that into your budget. But you're not going to be doing it every single day, and you're not going to be going to Target every single day, or, you know, once or twice a week to shop there randomly. You're just going to be the biggest word is intentionality. Like you're going to have to be intentional with that purchase and what you're planning your money for. Now, if you are really serious about it, and you know that you don't want to give that stuff up, plan it in. Just make a plan for it so that you know where you're going forward. So it's not like, you know, oh, well, now this month I've already had coffee like 5 times and, you know, I've just given up. Like plan it out and still enjoy that time. It doesn't mean you have to sacrifice everything, but you are going to have to sacrifice something because you didn't. That's why you're in this situation, you know?
Yeah, absolutely. Like it's the behavior change that's really going to make the difference here. And yeah, like you said, like you can find ways to still have fun or still go out and do things on a budget. And I think if you can really get creative with it and like find joy in the little things and realize it's not so much about buying the coffee, but maybe it's more about going out with my friend, or it's not so much about making that purchase at Target, but maybe it's just getting out of the house, you know, like identify what is the thing that's causing you to want to do that and then find a way to do it on a budget. Because at the end of the day, like you got to make these changes or you're never going to make progress.
Yeah, agreed. Well, let's move on to the next situation here. So this one says, thinking of marrying my girlfriend, but she just revealed her debt. Is this a mistake? My girlfriend and I started dating in college and have been together for 5 years now. We rent an apartment together and split our joint expenses, but never really dug into each other's finances. Things have gotten a little more serious since living together the last year and a half, and we've started hinting to each other about what the future would look like together. I told my parents I'm planning on asking her to marry me, and after all their excitement, they asked if we've talked about kids and finances and things like that. I told them that money has never really been something we've talked about. So last week we went out for dinner and I brought up the topic of finances and tried to be as transparent as possible about where I'm at financially in hopes that she'd open up about it as well. After a long conversation, she finally did. Apart from the typical student loans and car, she owes about $12,000 in credit card debt. This really caught me off guard because she's never made it seem like she's strapped for cash and wouldn't need to rely on a credit card to pay her bills. We both work good jobs and make decent money. And since we split expenses, I've been able to save up a good chunk of money over the last few years. The debt itself really isn't the issue to me, but what's really getting to me is why she never talked about it before. I would have been more than willing to take on more of our shared expenses if it meant she could pay it off. Am I overreacting, or is this a red flag and something I should be worried about? I still want to marry her, but what if she keeps something this from me when we're married?
Yeah, I don't think this is a red flag, but I do think this is something you should try to understand a little more. Why did she get into this credit card debt in the first place? I think understanding that will be a really key part of trying to kind of discover what her values are around money. I don't think that you should avoid marrying someone because of the financial situation that they're in, or maybe there's a gap between where you two are at. And I think the more important thing is that you have the shared values and beliefs around how to handle money. And just because this person is in whatever situation they are, doesn't mean that they're incapable of changing that, right? Like maybe this person is ashamed of why they're in this debt situation, and that's why she's never brought it up to you. I think we see that a lot where people just don't want to tell their partner about it because they feel so guilty about it, or they feel so ashamed about it. And then that compounds with guilt from not telling them. But I think that it's worth talking about and digging deeper on to see, how did she get into this debt in the first place? I think if you can discover that, that'll alleviate a lot of the maybe like concerns or concerns that you're having with moving forward.
I also love this, that he was like, okay, we've never talked about finances. I'm going to take her to dinner and I'm just going to lay it all out for her. Here, I make $100K. I have $50,000 in student loans. Like, you can't do that first, buddy. You got to just like settle down for a second. The problem is like, we can't just dive right into these numbers. Like, let's take a step back. And, this isn't a red flag to me. I think a lot of people they don't grow up talking about money in their household.
Yeah.
You know what I mean? I think this is probably what this is. She probably just didn't think about it because her parents didn't do it growing up. It seems like him, on the other hand, his parents were like, hey, did you talk about kids? Did you talk about money? Like that family, and that it seems like he's pretty comfortable talking about his numbers. So it's not, I don't think this is an issue. I just think she needs to get more comfortable with it. And maybe you can help her along the way. Like, hey, talk to her about what are your goals for the future? Like, I think start there first. Like, you guys do seem to want to be married, and like, what do you want for your future? And then maybe dive into those numbers a little bit. My guess is, I'm just totally speculating, but I'm assuming like they didn't talk about money in her household growing up. Maybe she's just used to like the last situation, like going to Target, getting her nails done and stuff. And that she just puts that stuff on a credit card and doesn't even really think about her day-to-day expenses and not being able to pay for those or pay off her credit card. You know what I mean? So I think with a little bit of care and concern for the situation, like you guys can both think of a plan moving forward and you can get on the same page. Like I said, she probably doesn't even know that. And yeah, it's going to take a little bit to pay off or whatever, but you can definitely do this. I don't think she was being malicious in any type of way. So.
Yeah. And that's a really good point. And something I consistently have to remind myself of is, being that you're a guy, like, don't approach this with trying to find the solution right away. Cause I know that's something that guys just tend to do. Mm-hmm. Like they see an issue. It's like, cool, what's the solution? And kind of just disregard the emotion around it. And I'm sure that's a huge part of why she never told him about it, is like, I'm sure there's a lot of deep emotions there of shame or guilt or whatever it is. And I think if you try too quickly to find a solution without really understanding and digging deeper into like helping her feel like she can be open and honest about it, like I think you're just gonna, shoot yourself in the foot. But yeah, like if you two want to get married, I think finding a way to be transparent about your finances is going to be such a huge part of it, especially that given that this is kind of part of that foundation of the relationship that you two have had. And I think if you can find a way to be honest about your finances, and then you can kind of map out like, hey, how do you want to handle finances when we're together? When we're married, what does that look like? Obviously you got to have this conversation first about just kind of talking through the debt, making her feel comfortable with being open and honest with you. But I think that's another conversation that needs to be had of how do we want to handle our finances together. And I definitely don't think you need to, assuming that things are in alignment after you've had a few more conversations, like you two are on the same page about your values around money. Like, I don't think this debt should get in the way of you two getting married. Like, but I'm also a big believer that once you are married, like it's no longer her debt. It's your all's debt, it's both of your debts. And so what's going to be the plan after you've given some time to kind of process the emotions around it? What's going to be the plan to tackle this moving forward?
Yeah. And I also thought about, he said, he mentioned that they like split expenses and stuff right now. What if he makes significantly more than she does and they're splitting expenses and then she is putting stuff on her credit card? She probably didn't want to say anything like, hey, I can't do that. But, it seems to me they could maybe evaluate the situation while they're still dating. They're not going to combine their finances yet, but, evaluate that. Because if he is making double what she makes, maybe we need to take it from more like a percentage based approach and not like 50-50 because your incomes are not equal at this point. So maybe she is feeling like a little stretch of her wallet because she doesn't have that kind of money that you do. So just something to add there.
Yeah, absolutely. I mean, just wrapping it up, I don't think, I don't know that I'd say you're overreacting, but, I don't think this is something you should hold against her, like, give her an opportunity to be honest about it and try to create a space where she feels comfortable to tell you about these things. I think that's going to be a big part of it. And then once you two kind of get through these tougher conversations, it's going to be so much easier to just talk about money, and if you can kind of work it into things that it just becomes a regular thing that we kind of just talk about things that have to do with money. It kind of just lowers those barriers to just having an open conversation about it.
Yeah, I like that.
Why don't we move on to the last question that we have for today? This person wrote, people who have paid off their debt, what is the best advice you could give to your younger self to not get into debt in the first place?
Ooh, good question, Nick. There's so many different things that you could probably offer somebody, and based on like what the debt is, I think. But I think a lot of people need to zoom out on the situation. The vacation that you're putting on your credit card for 23% doesn't seem like a big deal right now. You're like, I'm going to pay it off in a few months. But when you're still struggling to pay it off years down the road, then you're going to realize like how big of an issue it really was, so really thinking about the bigger picture there. Something else that I think we fail to do is like run all the numbers before making a purchase. Like I think I mentioned in a few episodes ago that I bought a $17,000 car when I was making $25,000 a year. I don't think I fully ran the numbers on that one. Yeah. So making sure that you fully understand like how it's going to impact your current finances. I think a lot of people do that. And something else that I hear all the time, and it's so painful now that I've paid off my debt and like I'm much more aware of my financial situation, get out of that I can afford the payment mindset. Because I think a lot of people are like, okay, like especially those like afterpay services, like, oh, it's like $8 a month or this or that, or I can afford this car payment or, whatever. Then it's like, before you know it, you're living like paycheck to paycheck, making all these payments. And if you lose your job, you actually cannot afford it. So just because you can afford the monthly payment right now does not mean you can actually afford that item that you've purchased. Also, I think another good one is stop making impulse purchases and take your time before spending. So I usually recommend like at least 24 hours, like the bare minimum 24 hours before you're making a purchase. That way you're making decisions from like your logical brain. So Amazon especially, it is so easy to just get on Amazon, pop things in the cart and just check out. It's at your door.
Oh, the one click buy. Oh my God.
Oh, and it's
amazing, but it's terrible.
Yes. And then in Chicago, like this is crazy. Since I moved to Chicago, I'm not sure if it's like for your area, but they can get here within the same day. Like there's sometimes that I will order and it arrives in my door within like 2 hours. That was not the case in Pittsburgh. I just don't think I don't know if there's like Amazon like warehouses here or something, but like it gets here very quickly. So that is so dangerous to like be able to have that item in your hands in like 2 hours without having to leave your house. So I think just creating like a space between like the impulse of you wanting to do it and like, okay, now I'm checked into my logical brain here. Is this something I still really want? Because like we talked about in an earlier episode, it's the death by 1,000 cuts. So it's really just those little things. Like you might think your $30 Amazon cart isn't a big deal until you're doing it multiple times per month. You know what I mean? And then for things like college or, whatever, just make sure that it's going to have a return on the investment. Like,
absolutely.
Is that degree really going to, if you're going to pay $100,000 for a degree, is that degree going to pay you whenever you get out of college? We just talked about that the last time. There was somebody with 140,000 in debt and they were making 38,000 per year. It's definitely not a return on investment there. And then you're in a really bad financial situation. So really the moral of the story is slow down, just take a step back and make sure you know the numbers to the situation.
Yeah, I love that. And maybe you could even have like a threshold for yourself that says, hey, if this is over a certain dollar amount, I just need to sleep on it and just see if I still want it in the morning or if it was just going to be an impulse purchase. But I mean, I have absolutely fallen for those Amazon traps, especially because right next to the checkout button or like add to cart button, there's like a timer and it says, hey, if you order this within the next hour and 30 minutes, like you'll get it by tomorrow morning. I'm like, do I really need it? But I might need it tomorrow. So let me just order it. Yeah. But yeah. And you know what? You said this earlier, but I think the biggest advice I could give is to treat your credit card like a debit card. And all that's to say is that if you don't have the actual cash to back up that purchase, then you can't afford the item. Like too many people fall into the trap of saying like, oh, I'll throw it on my credit card and I can just deal with it later. Or I have that paycheck coming in later, or they just don't even care at that point and they're just willing to deal with it and kind of kick the can down the road. And I think that's how people fall into such huge amounts of credit card debt, is because they get to that later. They get to later, right? They get to the point where they should have had the extra money to pay for that item. And then they didn't because something comes up and you had to pay for it in the moment. And now you're kind of stuck with that payment that happened maybe even a month ago. You know, with credit cards, you can have like as long as 2 months to get something paid off before it starts to accumulate interest. So yeah, if you don't have the money to pay for it, like now in the moment, you probably can't afford it and you probably shouldn't be buying it.
Yeah, I agree with you.
Yeah. You know, and if you're someone who has fallen into credit card debt, you know, I would say like, give yourself a little grace, you know, give yourself an opportunity to say like, hey, like I made this mistake. I recognize it now. And now it's time to move forward from it. And I think a big part of that is just going to be identifying what got you there in the first place. Like if you can understand how you fell into the trap of credit card debt, you're going to be able to avoid it, but you're also going to be able to process like, okay, like I'm okay now. Like I can get out of this and I can stay out of it. But yeah, I think that's all I have. Lauren, do you have anything else to add?
I don't think so.
Cool. Well, that wraps up today's episode of Just Another Money Podcast. And, you know, as always, one simple ask: if you enjoyed the episode, if you got a laugh or you found some value from it, please just share this with a friend. That's really going to be the best way that you can help us grow.
Yeah. And if you want to have your money question answered on the show, you can visit our website, justanothermoneypodcast.com, and click the submit a question button. And don't forget to join us for another episode of Just Another Money Podcast. The information, opinions, and recommendations provided on this podcast are for entertainment purposes only and do not constitute professional financial advice. Any financial decisions you make based on the content of this podcast are your responsibility. We strongly recommend consulting with a licensed financial advisor or other qualified professional before making any significant financial decisions. By listening to this podcast, you acknowledge that we are not liable for any financial outcomes.